What's up, guys? Welcome to Paradise Park. My name is TK. I'm going to teach you everything you need to know about candlestick physiology and trading physiology. You guys got to understand that candlestick physiology and trading physiology is something that's very necessary for traders. I've seen most traders use indicators like crazy, and I'm going to teach you how to stop using indicators and how to actually use just pure candlestick physiology. So, in today's session, I'm going to teach you the four golden candlesticks and how to predict the next candle using these candlesticks. Okay, you gotta understand that trading is like a language. It's like English or Spanish or Portuguese or anything you want to call it. Then we use candlesticks. So there's four candlesticks that can actually help you predict the next candles. In trading, we call this continuation candles or reversal candles. So these candles actually show you if the market is going to continue or if the market is going to reverse. Let's just learn about these candlesticks, right? So the first candlesticks I want you to know is the doji. Okay, so the doji will look something like this. Okay, it's just a simple plain candlestick. Okay, so this is what we call a doji candle, right? So let me just name it for you guys. So we call this a doji. So in the doji family, there is types of dojis. Let me just show you all the doji in the doji family. So these are all dojis. It doesn't matter which doji it is, okay? So I want you to know that this candlesticks indicates continuation reversal. So I want you to know that this candlesticks indicate continuation and reversal. I will show you how later on. Okay, so the first candlestick I want you to know is a doji. Okay, this candle acts as continuation in a trend, and it acts as a reversal at the end of the trend, like at the important level at the support or resistance. I will teach you how you place the trade, and I will teach you how to use this candle to predict the next candle. So don't skip a part of the video, or you're gonna miss out on a lot of information. Okay. And the next candle I want you to know is a candle we call the hanging man. Okay. So this is how the hanging man looks like. Okay. You can call it a hammer, hanging man, whatever you wanna call it. Okay. And then we have inverted hammer. Okay, it's exactly the opposite of a hanging man or a hammer. Okay, and then we have what we call a spinning top. Okay, so we have what we call a spinning top. So this is how our spinning tops looks like. Okay, so we call this a hanging man. You can write down notes, guys. So we call this a hanging man. We call this guy an inverted hammer, and we call this a spinning top. Most of you might already know some of the names of these candles. Spinning top. Perfect. Okay, so these are the four candlesticks that you gotta know. You don't really need to know all the names of this gravestone doji and dragonfly doji, but they're not, the names are not really important. How you use them is what's important. Okay, so these are the four candles you gotta know, guys. These candles are gonna be your whole trading carry's success. You gotta know about the doji, the hanging man, the inverted hammer, and the spinning top. Okay, so how do we use this? How do we use these candles to predict the next candles? Okay, let's say we have a trend, right? Let's say we have a trend. Okay, let's say we have an uptrend. Let's say we have an uptrend. It's all green candles, right? Let's say we have an uptrend going on here, right? And then we see a hammer candle. We see a hammer candle, right? We have an uptrend and there is no level on the left side. Automatically, we know that the next candle is going to be a continuation candle. So we can take a call option for the next candle and we will win the trade. We can take a call option for the next candle and we will win the trade, right? So let's say we have a level over here, right? We have a level over here, right? We have a level over there, and then our hammer this time closes on the level. It closes on the level. It now acts as a reversal candlestick. So what we can do on the next candle, we can sell. We can sell on the next candle. This is a 95% share shot. We can sell on the next candle. So if you if you spot any one of these candles on a trend, there should not be a level on the left side. It should just be a clean trend. Or you can use momentum trades. When so how do we do that? When we have a momentum going up, right? 95% of the chance or 85% of the chance the market was going to try to follow this momentum, right? And kind of repeat the momentum, right? It's going to try going back to this support zone, right? So if you spot any one of these candles, any single one of these candles, if you spot any single one of these candles over there, if you just spot any one of these candles, anyone, anyone, anyone over here, if you spot any one of these candles over here, you can go for a continuation trade. You can take the next candle as a continuation. So that means if you spot a doji, if you spot a doji, you're going to sell. If you spot a hanging man over here, you're going to sell. I'm going to show you more about this on the live chat, right? I'm going to show you more about this on the live chat. Okay. So if we spot a doji over here, we're going to sell. If we spot a hanging man in the middle of this, we're going to sell, right? If we spot a spinning top anyway over here, it should be in the middle of the trend, guys. We're going to sell. Okay. And if we spot any one of these candles, give me a second. If we spot any one of these candles, any one of these candles on a level, it can be a support level, it can be a resistance level. Okay. It can be any level, a support or resistance candle we're going to buy. Okay. So let's say we have a let's just say we have a resistance level. Let's say we spotted an inverted hammer over here. On the next candle, this is just the market. So the market has been moving up, you guys. Don't forget that the market has been moving up also here, and it has reached this resistance zone. So we know that on the next candle for sure, we can sell. So we can definitely sell on the next candle, and it will be a sure shot. Okay, let's say we spot our spinning top. Let's say we spot a spinning top over here, right? Remember, the market has been moving up, and it has reached the resistance. So on the next candle, we can sell. So now do you see that these four candlesticks are very important? If you can use these four candlesticks, you can make a lot of money and you can change your winning ratio. So let's say we have a support level over here. Okay, so let's say we have a support level over here, right? And our market is moving down. It reaches our support. it closes with an inverted hammer, then for sure we know that the next candle is gonna be a buy, guys. The next candle is gonna be a short buy. So we're gonna buy on the next candle. Same applies if you see a doji over here, guys. If you see a doji that closes over here, on the next candle, you can buy. So one mistake most people do in this, especially from most of my students, I've seen them make this mistake. So let's say the market's going down. This is the mistake you should not make. You will lose. The market is going down, right? And then it creates a hanging man over here. It creates this hanging man over here, right? Guys, you cannot buy. You cannot buy in a situation like this. Why is it that we cannot buy? We cannot buy because we have this gap. We have this gap here. The market will do everything in its power to fulfill every level